Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about a stock that I am going to be building a position in and have already started. I currently own 14 shares of Draftkings, and each paycheck I am putting more and more money into Draftkings until I get that 100 shares. Although today I was looking at a particular option that I may be willing to front in order to essentially make this payment or make this buy. What you see here on the screen for Draftkings is a consistent decline from their high just a few short weeks ago, and it's pretty amazing how rapidly that they've kind of declined from an all-time high. And I really don't think that this chart necessarily does a great job of showcasing that, where if we look at this info right here in terms of the price performance over the year, it's a little bit more influential in showing just some of that rise to prominence. So a lot of the information this year coming from the fact that this is a company that, again, makes money off of sports gambling, in particular off of the various casino style games. You can see in the description right there that they do a lot on blackjack and other traditional casino style services. But the big thing that they've started improving upon is on the actual sports side. What I'm looking to do here, this is a position that I am taking on my Roth, is to accomplish two things. One, I'm going to be doing a covered put, a cash secured put, and what I'll do is I'll showcase that information on Thinkorswim momentarily. But I am big time long on this company, and I have a lot of faith that they are going to do well long term, despite the fact that right now the stock is on this big decline that you can see here, up from $64 a share down all the way to $41.50. So what is some of the reasoning for that? When we look at the news, there has been a lot of insider selling. The reason why I'm not overly concerned about this is because if you are an insider and you are a millionaire in 2019 because the stock price is valued at $10 a share and the stock goes up to $6 a share or $60 a share, you are now a multimillionaire and you're going to want to take some of that cash out. They are not selling all of their positions, but they are selling a substantial portion because they want to cash in on that money the same way that any of us would do. So what I'm looking to do is take advantage of the big sell-off and go in this for the long term. This is a 5-year plan for me, which is longer than most of my trading. The reason for that is I think that there is going to be a lot of different approaches to paying for the coronavirus pandemic. And an easy way to do that is to legalize online sports betting, which is currently only legal in, I believe, 9 states. Don't quote me on that. But this is an opportunity for a lot of people to be able to get back into gambling, even if they're not going to Vegas, going to some of the reservations where gambling is legal. So I really like the long-term prospects on this, and there's a few different ways that I want to get into it. And let's hop over to Thinkorswim for how we can look at it. So now that I've got Thinkorswim on here, as you can see, this is just the daily chart that I have here on the screen with a pretty decent move up after hours. So again, this is a stock that's moved quite a bit over the past few weeks, past few months. So what I'm actually looking at here, despite this huge decline, is I actually want to ride that momentum down. And one of the ways you can do that is I can actually sell a put for next year. The reason why I'm choosing October is because I think that the price is going to accelerate going into next year about this time. In particular, accelerate when we're looking at the fact that football is going to be starting back up about a month and a half prior to this, particularly the NFL. What I can do, notice I'm on the sell side, is I can sell a put for next October. And instead of the $40 mark, which would require $4,000 of collateral, I'm actually going to look at the $35 mark. And as you can see, someone is willing to pay me $1,010 for that price. So the only way I lose is if this time next year in August, or in October, the stock price is below $25 a share. So the company would really have to crater. However, my max loss on this, because we can't really see it right now, my max loss on this type of trade right here is going to be the total difference between the price that I sell at and my collateral that would have to be held. So $3,500, I get paid $1,000. So the difference between the two is what I have for my total risk. So right now it's, again, because I have to pay that commission and apparently the 3 cents, I guess, for the time. But this is my resulting buying power. So this is my total risk, which I am very comfortable with on a stock that I think is only going to go up. That being said, if you don't feel like this is an appropriate risk level for you, you can still touch some of this without necessarily going all the way out to that level and still be able to basically experience the run up or the selling side at the bare minimum. So the reason I like the put side is because we can still essentially take advantage of the long-term potential, where if the stock shoots up to $100 a share, you're still done for. So even now, although I don't like the 245 side, but the only way you can lose on this trade is if the stock is under 27.70, and that's again a year from now. So the risk to reward isn't terrible, although it locks up your collateral for quite some time, and this really isn't going to move unless the stock really shoots up. So what I'm going to be looking for is, again, that long-term cash secured put. So again, I like next October. I like the put side, and I'm going to be doing 35 or 30. Even the 40 is very incentivizing. But what I'd like to do with the $1,300 that it would pay me is actually use that to purchase more Draftkings. So this is a play that I'm going to be working on going into the end of the year, is pulling the cash together so I can sell the cash secured put, and potentially maybe doing that after the election just so that I have cash on hand to see what happens. But this is a great way to get in on stocks that have a lot of volatility and have a lot of bullishness, as these cash secured puts, where you can get paid so you can go and buy the exact same stock. So this is just a trade that I'm going to be doing, and one that I'm going to be watching. If you found this content helpful, please leave a like and subscribe. And if you're considering doing this on some stocks, please let me know in the comments below. Thanks. Talk to you later.